And for further analysis, we're joined from London by CEO of QW Capital, Gianluca Lobafello. Welcome to Q News, sir, and it's a pleasure to have you with us in our economic bulletin. Sir, what are the economic implications of recent UK borrowing figures in the context of slower growth in 2 consecutive months of economic contraction?
Yeah, good evening, everybody. It's actually quite a unexpected figure in a sense that, as you pointed in your report, this has been the second biggest since record started. You are talking about 1993. So 20.7 billion in June is quite scary, considering that there is not a lot of head move, space for maneuver for Reeves, because as you can see, we have now inflation that is basically in excess of 3.5, or let's say close to 3.5 if we look at the big number in the headline. But if we look at the core one, so without the volatile item of food and energy, we are reaching 3.7%. So the central bank cannot really have a lot of space to cut rate. On the other side, we have the GDP growth is tilting on the downside. So we are heading towards a kind of stagflation in the UK. Bear in mind that obviously now Reeve, the only leverage he has is eventually to increase tax. So we expect in the October budget more tax increase above all for the higher earner, but that's actually got, some drawdown. So it's not as obvious as it can be seen.
Sir, what are the risks and opportunities for the United Kingdom economy, given the Bank of England's balance between maintaining financial stability and responding to calls for regular easing, sir?
Yeah, in theory, we had to put the situation or the current situation of the UK in a kind of bigger historical context. I mean, we can blame this government and specifically the Chancellor Reeve to take eventually not the best solution ever, or best decision, but actually the situation she inherited is quite struggling, is quite difficult. So in reality, we have to look more in the perspective of what not just the previous government, but I would say since the late 90s. So we're talking about the previous Labour government, so under Blair leadership, the UK government, the Tories government in the mid-2010, and now. We are seeing that actually after, as you may remember, 1976, when the UK needed the IMF bailout, and then they repaid these bailout loans to the IMF in 1979, they had an incredible bullish period that correspond to lower interest rates. So we had interest rate that went downward for 39 years. So from 1982 to 2021. And we have seen the UK experiencing an incredible growth in GDP from being needed and help from the IMF. It went to be a G4 country. But then we was enough to see 6 months of increasing expectation on interest rate at global level, so from the end of 2021 to mid-2022, to see then what happened in 2023 with the famous crisis in the fall under Liz Truss government. That was just a symptom of an unsustainable financial public status of the UK economy.
Sir, how do recent fiscal decisions, including increased employer national insurance and capital requirement changes, interact with monetary policy to influence the United Kingdom's prospects for economic recovery and inflation control, sir?
That's actually a very key point, because all these decisions to eventually increase tax rate, to increase the national insurance, it all makes sense from a deficit, from a budget analysis. So I can see in Reeves' shoes that is one of the most logical decision and obvious decision to be taken. And if you look as well at what the recommendation of the OBR, so the Office of Budget Responsibility, they are inclined to agree with Reeves. The only problem is that what implication we're going to have for the GDP growth expectation. Don't forget that there's been a three set of very bad events that hit the UK. One was own making, so the Brexit decision. The other one obviously is nothing to do with them. It hit all of us, so during the pandemic in 2020. And then all this decision on letting basically all the wealthy part of the citizen to actually not being offered any longer the convenience condition, and so they all basically, most of them left to other countries. So we are seeing three sets of decisions that can be interactive with each other. And unfortunately, in a moment of deficit for the UK, GDP growth that is not as good as was expected, and clearly a more biggest interest expense because interest rate cannot be cut by Bank of England, can be a mix, a very dangerous mix for the UK economy.
How might the proposed veto stance defended by Governor Andrew Bailey impact the United Kingdom's financial sector stability and support economic growth, sir?
Andrew Bailey has been an incredible officer. He was at FCA, the bank, the financial market regulator before joining Bank of England. So I would say he doesn't have a lot of space for maneuver. He will not have a positive term, but it's essential that what changes because it's fundamental for the credibility of the UK economy. So there is no much space for the Bank of England and for Bailey himself.
Sir, do you see a way that the Bank of England or the economic status of the United Kingdom is going to be better or is going to be out of this big problem?
I mean, there will none on the short term. We are seeing a slowdown. So, there is a cyclicality in the economic growth and boom and bust. So we are definitely seeing a moment of slowdown, a difficult moment for the UK. I think one of these, the merit of this government is to try to reestablish all the ties with the European Union. I'm not saying rejoin European Union, but definitely having a much more effective and efficient relationship with Europe. That would be a one big plus, but
Do
non
you
in the
think adding to the European Union or getting with the European Union would be a good idea?
Yes, bear in mind, I'm not saying rejoining because if there
I
is something,
understand you're not
yeah,
saying you're not
but,
joining.
but
You mentioned so.
absolutely yes. They imagine that when they did the trade agreement with Australia, that it was supposed to partially replace the relationship they have with the biggest counterpart, that is Europe. The Australian agreement was representing 0.08% on the UK budget or UK GDP. So definitely is needed a strong and more effective relationship that brings the clock back to where Brexit. So they need to have a very effective relationship, European economic relationship with European Union. Absolutely.
And it's worth to mention to her that the United Kingdom is used to be one of the strongest economies all over the world and globally. From London,
Yes.
that was CEO of QW Capital, Gianluca Lobafello. Thank you very much for joining us in Q News channel, sir. And it's a pleasure to have you with us. And thank you for your insights.